We've got about $2.7 billion of cash on the balance sheet, so a very strong position, as well as low leverage. So we have a lot of flexibility. As you know, one of the things we've done is we increased our share buyback program, and we announced that earlier this year. And it's about an $800 million program. In the third quarter, we bought back around $200 million of our stock. We think that's a good use of shareholders' capital at this time, given where our share price is at. We're also well positioned for both a strong defense and a strong offense. So we're looking at acquisition opportunities around the world. We're investing in growing our businesses organically, and we think that's a fantastic position to be in, given where we're at this point in the cycle.
I know the life cos have, in recent years, turned their gaze to Asia in terms of opportunity in that market. Is that more about a play of an emerging middle class that perhaps aren't as well insured as, say, someone like me in North America? I am very well insured at this point. I imagine there's more opportunities to sell to the other parts of the world.
Absolutely, and we see that in our 7 markets across Asia, Greg. These are markets that where the growth of the middle class is extraordinary. People moving into middle class for the first time, having the financial means and the kind of presence of mind to want to protect themselves and their families. First of all, for health care. Second of all, to save for their kids' education. Those are the two dominant themes that we see in Asia across the 7 markets in which we operate. So it's been driving very strong growth in our business across Asia, and we expect that to continue for the foreseeable future.
Now, here in North America, do the opportunities become more about the organic growth of the existing business, or are there still a few areas to pick away at in terms of picking up companies?
We think our prime focus is organic growth, and we still think there's a lot of opportunity to grow our businesses here in North America organically. So starting here in Canada, we started a mutual fund business a number of years ago, Sun Life Global Investments. We've grown that from 0 to $22 billion of assets under management. We think there's still a lot of room to grow that business. We just announced the launch of Lumino Health, which is the first of its kind digital health platform in Canada that lines up. We've got about 6 million Sun Life plan members who are members of a Sun Life benefits plan, versus lines them up with 150,000 healthcare providers. And on this platform, our plan members can see quality ratings and cost comparisons and get lots of information on how to access these, physios, chiros, chiropractors, dentists, and so on, and also ideas for improving their health. And we just announced with Lumino that we're opening up that platform to all Canadians. And in the United States, the growth in our stop-loss business and our benefits business have been significant. We see a lot of runway there.
One of the trends we've been reporting on in terms of the life cos and some of the tech advances, everyone trying to leverage technology, this idea that I'm wearing a watch that tracks my heart rate, my calorie burn, the number of steps I take, that would become a part of your life co policy. At the same time, some people immediately bristled at the idea. Wait a minute, why does my life insurance provider need to know that much about me? Is there a fine line to navigate here in the age of privacy?
There is a fine line, and it won't surprise you to know that at Sun Life we spend a lot of time navigating that line. The way we talk about it, Greg, is that line between creepy and cool. And let me give you a few examples. On the cool side, our digital benefits assistant, she's called Ella, she's our bot. She looks at data for a particular client and then will nudge you. And for example, say, hey, Dean, your 21-year-old is about to drop off your benefits plan at work 3 months from now, so click here to cover her for medical coverage or cover her for out of country. When we do that, our clients say to us, that's cool. Thank you, Sun Life. Thank you for giving me that nudge. Thank you for giving me that heads up. You can imagine other nudges where the reaction might be, gee, that's just a little too personal. You're using some very personal, for example, drug information on a new drug that I'm taking, and you're nudging me, and maybe, how do I feel about Sun Life knowing that I'm taking that drug? Of course, we pay the claim, so we know about it, but there's that line between creepy and cool. So we're spending a lot of time on that. The most important thing, though, is that we have all this data, and we know if we use it responsibly, we use it proactively, and we use it in our clients' best interests, we're going to do a great job for them, and they will appreciate that. And that's what we're seeing as we build out our digital health solutions business.
Definitely interesting times on that front. I want to ask you a bit about what we saw in the United States. I know that your earnings have been helped by the fact that the tax cuts in the States did provide a little for the bottom line. But now that we have the Democrats controlling half of Congress, does that, boost to the earnings, sort of just level out? Or would you expect perhaps even an impediment if Donald Trump gets reined in on his agenda?
Well, it's difficult to draw a line between the change in the House to the Democrats and our business results. One of the things that I'm sure you've commented on and others have noted is that after midterm elections, the stock markets tend to do relatively well in the run-up to the next presidential election. And if that is true in the next couple of years, and I don't have a crystal ball, but if that's true, and if markets are a little less volatile, that will benefit MFS, that will benefit our asset management businesses, and that will benefit the economy, which in the end helps our group benefits business to the extent that employment's growing and wages are growing. The benefits that we provide, think of life insurance and disability coverage through the workplace, the volumes are geared towards GDP growth in the United States. So all of that lines up well. What we don't know, of course, is what kind of volatility will we see in markets and impact on the economy from trade disputes and domestic disputes within the U.S. As Congress finds its new footing. So we can't predict those. I would say overall, though, you come back to Sun Life, our medium-term goals that we've put out to investors, growing our EPS by 8 to 10% a year over the medium term, we feel confident that we can continue to deliver on that. ROE of 12 to 14%. We're actually riding at the top end of that range, and we feel confident about that. And then the dividend payout ratio in that 40 to 50% of earnings range. And with today's announcement of a 5% bump in our dividend, that's one more thing that's keeping us in that 40 to 50% range.
I want to ask you, closer to home in the industry, the Manulife lawsuit that's attracted so much attention. I know that this doesn't have an impact on you, but I just wondered when I heard about it over at Sun Life, did you suddenly say, or at least order the staff, let's look through all of our products and make sure that there's not a loophole in there that we're not aware of that would leave us vulnerable the way Manulife is trying to fight against right now?
Well, you're right to say that in the case of Sun Life, we don't have those kinds of policies with those kinds of features. What I would say about that is that, these insurance contracts, and I won't comment on the case before the courts, but it's interesting that the province of Saskatchewan came out and said, these are meant to be contracts of insurance, and they were never meant to be deposit contracts that, like a bank account, to take unlimited deposits. They were really meant and sold and portrayed as contracts of insurance first and foremost. That's what life insurance companies are licensed to do, and so I think that continues to be the principle, and we'll see where that one lands. And I think it's generally well understood by Canadians that that's the principle behind those contracts.
Lastly, I want to ask you, there's a fall fiscal update coming shortly, just in a couple of weeks, from the federal government. Anything on the wish list as a leader of Canadian business that you'd like to see this government do?
Well, I think tax competitiveness continues to be an important issue for Canada. I think that you would have read different and differing points of view on that, but I will tell you, given we operate around the world and we have choices as to where we deploy our next $100 million of capital. We have choices, and I think the tax rate does matter. And I think the step the United States took with tax reform has made a big difference on deployment of capital and allocating capital, repatriating capital in the case of the U.S. And I'm hopeful. I know the finance minister has taken a lot of counsel on this issue, including groups like the Business Council of Canada, and I'm hopeful that the finance minister will put forward some meaningful tax reform improvements to keep Canada competitive.